Hey guys, it's Toby Mathis, and a question we get right now specifically is what happened to all the houses? Do they just disappear? Are we going to have a big cliff of this real estate market? Is it going to go crashing down? And the answer to the first question answers the second question. So the first question is, where are all the houses? Why does it seem like so many houses have gone away? And what you have to look at is every year a certain amount of houses burn down or put out of commission just because they got old and they're not being maintained. We have population growth. And so there's a set number of units every year that we have to build just to stay even. That number, depending on who you look at, is somewhere between 1.7 and 2 million units. So if builders are building that many units, if rehabbers are putting back into service decommissioned properties, the old abandoned house that someone decides to gut and make usable again, if they are not putting in at least 2 million units a year, we're not maintaining our current need. Now we get into the critical component, which is this market going to crash like it did in 2008? And you got to understand, we were overbuilt in 2008. We are underbuilt now. And it doesn't help that we had, $9 trillion put into the economy by the Fed buying up mortgage-backed securities. So it's a completely different scenario. The real estate market, from everything I can see, I don't care whether they raise interest rates for 2 years straight, that might cool it off, but it's growing like this. Cooling off means it's just not growing as fast. Even if it starts to break even, it doesn't mean we're going backwards. And what we have is a significant amount of underbuilt, where we're probably in the 3 to 3.5 million units that were underbuilt. And right now, builders they've been keeping up with that 2 million mark, where at least we're not going backwards, but they're barely keeping up. They're building about 1.7 million units a year, which means we're barely keeping up with just the normal need to replenish. We're certainly not overbuilding right now, but we are consistently underbuilt. And where it's hitting us the hardest, where it's been absolutely devastating, it's the poor. And I know people always think of like the poor, they always think of the homeless. No, I'm not talking about the homeless. I'm talking about people making below the average family income of $75,000 a year. You're making less than $75,000 a year. Guess who they haven't been building for? You. So that's all of our millennial friends out there. That's a lot of people that are new into the marketplace. That's a lot of people. I mean, just think about it. Household making less than $75,000 a year. What is that? That if I am working for $20 an hour, I'm making about 40, right? So that's two people working, making about $40,000 a year is that household. And it's really tough to find affordable housing. So they are being basically housing restricted or overburdened in their housing. And we're seeing that everywhere. In my neck of the woods in Las Vegas, a 1-bedroom unit is about $1,300 a month in Henderson. It's $1,100 to $1,200 a month if you're out in Summerlin. It's very, very expensive to have access to housing right now. And it's not stopping. I don't see this going away overnight. We need to catch up, and we need to increase the amount of units that we're putting into commission before we ever start seeing the growth stop or a retraction. Right now we have too many dollars. We have a ton of cash that's been put into the pockets of Americans. We've never had higher savings rates than we do right now. If I go back into history, maybe you could argue in the 60s, but definitely not right now. So we have a massive amount of cash chasing fewer units. Now, hopefully we start to keep up and we start to gain some traction on the units. You're seeing lots of innovation. You're seeing people do 3D printers, boxable companies where they're doing more manufactured housing. You're seeing all that come into play. You're even seeing shared housing and perhaps the dormitory come back for housing for normal people. Like we always think of dorms as being something for colleges. In a lot of countries that have high density, that's what they're using just for regular housing. I could see that coming back in the United States stronger in our denser neighborhoods. Otherwise, we're just going to have to see history and time take its toll against that depletion. We're underbuilt by about 3 million units. How many years will it take us? Under the current state, we're barely breaking even. So we're going to have to see a lot more building before we ever see a retraction. Now, I will address the question a lot of you guys have, which is, what about interest rates? What about interest rates? Right? They're still really, really low. As we're sitting here right now, we're at close to historic lows. Yeah, 2021, we saw the absolute bottom, but we're still at about 2019 levels. We are nowhere near a situation where housing affordability is being dramatically affected by mortgage interest rates. Mortgage interest rates have to go up for probably a year and a half to 2 years before we see affordability really start to get restricted. And where affordability has the biggest impact is when you're over $500,000. So I tend to look at $500,000, $1 million, $2 million. Those homes may cool off before everything else. If you start seeing those guys cool off, then you know, all right, that the interest rates are having their impact. But on housing that could be cash flow real estate, you have BlackRock chasing that, you have investors chasing that, you have large hedge funds chasing that, and you have first-time home buyers chasing that. You have a whole bunch of people with a lot of dollars behind them chasing those homes. And until we significantly increase our output on those, I don't see that stopping anytime soon. I think you're going to still see affordability issues continue in the United States for at least 2 more years. I think that you're going to see the housing prices continue to increase below that $500,000 mark. I think that's pretty close to our average house price right now, is right around that $500,000 mark. I don't see that stopping. And I think anybody who's telling you that a crash is coming just doesn't look at the numbers, and they're just making stuff up. Maybe they're repeating what somebody else told them, because the numbers are, we don't have enough inventory for these people. Over the last 10 years, if there was 4 houses built, 3 of them were more than likely built for households making over $75,000 a year. Even though at least half of our population's below that mark, we have not been keeping up with that demand. And so we're going to see that play out in the market consistently for the foreseeable future. You're not going to see this big crash that anybody's talking about. What you're going to see is continued growth, especially underneath that $500,000 mark.